The biggest unspoken fear most investors have isn't a market crash. It's the quiet panic that their safe retirement portfolio simply isn't growing fast enough to actually fund their future. Today, we fix that. Welcome back. In video number 2, we built your core portfolio, the heavy steel anchor that keeps your money secure. But safety alone won't build exceptional wealth. Today, we are opening the second bucket in our 6-segment framework, the Volatility Harvester. This is where we step out of our safe zone and learn how to intentionally use periods of extreme market optimism to aggressively accelerate your returns. If your core segment is an unbreakable foundation, think of the volatility bucket as a wind turbine. A wind turbine doesn't hide from a storm. It actually needs the violent weather to generate power. This bucket exists for one specific reason: to intentionally accept wild, short-term price swings in exchange for extra profit. When the market gets highly emotional, driven by extreme fear or greed, prices move way too fast. This segment is designed to capture those temporary overreactions without ever risking your safe, long-term investments. So, what exactly belongs in this bucket? Let's keep it very simple. We use this segment to take advantage of times when the overall market is feeling incredibly optimistic, what professionals call a risk-on environment. When investors are greedy and willing to take chances, we buy highly volatile stocks and specific ETFs that are wired to accelerate and benefit the most from this exact wave of optimism. You are intentionally buying assets that thrive when the market is feeling greedy. Now, here is a critical detail. You must run this strategy inside your retirement portfolio. Because this volatility bucket involves actively buying and selling to lock in quick gains, doing this in a regular brokerage account would trigger a heavy tax bill on every single trade. But by operating this segment inside a tax-advantaged account like an IRA, you completely shield those transactions. You capture 100% of the profit, avoiding capital gains tax, and let that money instantly compound for your retirement. The most important rule here is knowing exactly when to turn this turbine on. You do not guess. You use strict market compasses. You only activate this bucket and look for these trades when 2 specific conditions are met. First, the fear and greed index must be pointing clearly to greed. Second, the VIX, which is the stock market's fear gauge, must be resting calmly below the 18 level. When both of these compasses align, the market is giving you the green light to step in and harvest the volatility. But knowing when to enter is only half the strategy. Knowing exactly when to sell is just as critical. You do not hold these positions forever. When the fear and greed index pushes into extreme greed, and your positions in this bucket have gained 10% or more, that is your mechanical signal to act. You sell the positions, you lock in the profit, and you step away. You harvest the gain and patiently wait for the next setup. Your core keeps your retirement safe, but your volatility bucket captures the extra returns when the market conditions are exactly right. If you want to stop guessing and start building a real system, hit the subscribe button. Next up, we are opening the third bucket, the event and tactical segment, where we'll learn how to exploit specific, time-sensitive market opportunities. Click the video on your screen right now for video number 4, and I'll see you there.